Welcome back to Markets Today. I'm your host, Ambitha Mwema. We are discussing MansaX as a product and understanding what is happening with different asset classes globally. Mr. Nahasha Mungai has joined us in studio. He is an executive director at Standard Investment Bank. Welcome back to the show, Nahasha.
Thank you.
Before we took the break, you gave us an overview in terms of currencies, what pairs could possibly do well. You've given us an overview in terms of US as an economy, the geopolitics, the upcoming election cycle.
Yes.
We've also talked about commodities and the outlook for that.
Yes.
Are there any other assets that MansaX has exposure to, and what's the outlook for this?
That's pretty much it. And then, and then variations of how we trade those assets. So I would say, I think we've covered everything there.
Okay.
I don't know. I don't think we missed out
so
on
we've
anything.
covered everything.
Other than maybe just talking about the global, the indices themselves.
The indices,
Trading the indices themselves,
Okay.
which sometimes it can be a lot more predictable than individual single stocks.
Yes.
And we expect that this should be very exciting in Q4.
Okay.
And also very hard, much harder to trade. I mean, with now the allegations that there might even be tampering in the U.S. elections.
Yes.
Whoever thought you'd be hearing some of these things?
You only thought that this happens in Africa only, but it happens everywhere.
I don't know, Russia and Iran have been accused of tampering with U.S. elections, possibly.
Yes.
So you don't know. You might even have something like a postponement of the whole thing, and this will really affect markets.
So the next 2 weeks are very critical, actually.
Very critical.
The next 2 weeks.
Very critical.
Okay, interesting.
Yeah.
Okay, now let's go back to the performance. So third quarter was a good quarter. You and your team were able to redeem yourselves. Congratulations, because 29.38 it's a very good return in 1 quarter. So should this be the trajectory here on?
Well, hopefully. I mean, one of the reasons why we underperformed in Q2 was the defensiveness with which we approached markets. Again, Q4, Q3 we were quite aggressive, and that shows in the returns. Q4 will be a mixture of both, because we are about to close a year. It's important for our clients to to have a good close to the year, and at the same time we still have to give a reasonable return, something close to what we gave last year or even better.
Yes.
But again, we also have to be very careful around all these geopolitical risks that we are seeing.
Okay.
I mean, there are a number of factors. In Q4, you have everything from Brexit to US elections to concerns around the stimulus package. You have concerns around whether the US and China trade tensions will continue, especially if it's used as a narrative in the Trump campaign, and how that affects markets. And it really affects markets. One tweet from Trump saying anything negative or positive about the relationship with the Chinese will alter markets significantly.
Exactly.
So Q4 will be essentially something like Q3, but on steroids, so to speak.
Interesting.
Yeah.
So if I'm looking at this particular fund and I put in my money, say at the beginning of 2020 or any point in time during 2020,
yes,
based on this returns,
yes,
I know you cannot predict the future with certainty. You can only just do the best in terms of maximizing the opportunities.
Yes.
Can I look at this and say, in 4 years, my 250,000, which is the minimum that I invest, will have doubled?
In 4 years? Well, close to yes, exactly.
Yes.
Even after fees, yes. If we kept the same trajectory.
If you keep the same trajectory.
If you keep the same trajectory.
Okay. And how do I get in and how do I get my money out?
So getting in is quite simple. So there's a KYC process that you go through. So you just contact us, and there are many ways of doing this. You can contact us by calling us directly. You call someone. You call the office. Someone will be in touch with you and give you the requirements to open. So you open an account just like any other bank account. So we take you through a KYC process. We let you know why you need to wire your funds after you've completed your KYC process. Our custodian is I&M Bank, and then after that you will be given a business confirmation. We confirm that we've received your funds, and now we are ready to trade for you. And say our recommended lock-in period is 6 months to 1 year.
Okay.
So say after 1 year we've given you a certain return, and you want to withdraw a certain portion of the fund, or maybe you have an emergency and you need the money.
Yes.
The process is even simpler, because every client gets allocated a relationship manager. So you just get in touch with your relationship manager, and they make the withdrawal on your behalf as quickly as our turnaround time is under 24 hours for that.
Okay.
Yeah.
And when you say distributing returns, how does it work? So for instance, in this quarter, you've made 29.38%.
Yes.
Previous quarter, 16.08%.
Yeah.
How do you distribute returns to shareholders?
All right, so we use a system very similar to how every other CIS in the country works.
Okay.
So the fund, in a sense, will get into all these investments in some sort of pooled vehicle, all right, but accounts for every investor are completely segregated. So our fund management software is able to distribute on a daily basis the gains or losses that the funds makes. And that's how you then get your return in your individual account based on how the overall fund is performing.
Okay, so then I think on a regular basis, if I'm part of this particular community, then I get a statement that shows me
correct.
the value of my initial investment.
You get a quarterly statement.
Okay, a quarterly statement. Okay.
Every quarter you'll get a comprehensive statement showing you how you're performing, how your fund, I mean, how much we're giving you in terms of returns, and how much we're deducting from you in terms of our fees.
Okay, and then you said that in perhaps the holding period, a good holding period is 1 year.
Yes, that's a recommended period.
All right, then after 1 year you can be able to access. Is there like
actually, we don't have a lock-in. I mean, we do not have a penalty if you withdraw sooner than that.
Okay, that's what I was getting at.
Yeah, we do not. And the reason for this is because one of the biggest qualities and one of the biggest things we pride ourselves in MansaX is the fact that we invest in liquid assets. So we pride ourselves in the fact that if an investor feels that maybe it's an emergency and they need their funds, they should be able to access the funds.
Okay,
because we're not in illiquid assets at all. Yeah.
Okay, interesting. And then after that, if perhaps I put my money in and the minimum is 250,000, I hold it for a year.
Yes.
Do I need to sort of a time period, maybe a day, 2 days, 3 days, if I wanted to pull part of my money, or how does it work?
All right. So you invested today and 2 days later
No, not 2 days later.
Okay.
Like maybe I invested in end of 2019.
Yes.
And it's the end of 2020 and I was hoping to do something January of 2021.
Yes. So again, just let us know.
Just okay. So it's just as easy as communicating with your relationship manager.
With your relationship manager.
Okay.
I mean, we have over 40 staff on standby just to communicate and interact with the investors and execute their orders and requests.
All right. Yeah. Actually, let me correct myself. I said if I invest 250,000, it would take me 4 years to actually double. It's much less. Because
because let's say about 20 a year.
Yes.
That's 80%.
Okay.
So it is.
Yes, so it is.
It is correct.
Okay, interesting. Yeah. Okay. Yeah. And then how is the uptake? How is the appetite? How is the local investor? Because you do engage with investors on a day-to-day basis.
Yes.
And I like the variety in terms of what you have in your particular fund.
Yes.
Because when I look at the returns, when you talk about those returns, when we come to looking at Kenya, we'll probably look at fixed interest.
Fixed income, real estate maybe. And maybe some stocks.
Some stocks?
Yeah.
So stocks, I mean, they've been volatile, but real estate, you're lucky if you get an 8% yield.
You're very lucky if you do.
So
probably under 6% now.
Probably under 6%. And then if you look at fixed income as well, the 1 year is now 7.8%. So you're barely covering your inflation cost, right?
It's tricky.
Okay.
I mean, unless you're going for longer dated papers.
Yes.
In which case, unless maybe you're trading significant volumes, it might be hard to get in and out.
Okay.
Again, so I mean, local solutions are less and less, and that's why again we felt as SIB that we need to create a platform that helps investors access all sorts of asset classes, even derivatives, for example, of which we also trade
locally or externally.
Both
markets.
Both markets.
Okay, so when you engage with this kind of investors, the ones that are currently on your platform, as well as people who want to come in, what's the sentiment that you get? I'm sure they're extremely excited by the return.
They're very excited.
But what's the frustration? So in other words, what's MansaX trying to solve in terms of investment opportunities in this part of the world?
It's a good question. I think the first thing is to give returns irrespective of market conditions. That was very important for us because, as you mentioned, with very limited investment opportunities locally, it meant that if there was any underperformance in any of them, it meant investors had to wait for years to get any sort of return. That was frustrating for investors.
Okay.
And then, so that's one of the things that we needed to solve, and we did that by, of course, increasing the mix of asset classes that we trade. And the second thing, and this is the kind of feedback we get from investors, especially now, is liquidity. A lot of investors are concerned about, if I need to access my money, how quickly can I get it?
Exactly.
Are you going to tell me that, no, we are not giving you your money now because of reasons A, B, and C? That's a big concern for investors and continues to be one of the biggest concerns that we see from potential investors right now. Mm-hmm. Then, of course, the third one is return.
Return.
Yeah, and it's very interesting because I've seen the evolution of the Kenyan investor. When we started this fund, most investors are most concerned about, am I going to make a good return? Are you going to double my money? And so on and so forth. Now, liquidity is like one of the key concerns. Can I get my money back? And therefore, as a fund, that's one of the things that we're very careful about. Then the other thing that's very important to them is just, how do you govern the fund? Is this fund well governed? Do you have proper corporate governance? Do you have somebody who oversees your activities and so on? Are you regulated? Are you audited? Those kind of concerns now seem to be more of a concern to investors.
Okay,
yeah.
And especially I guess as we're getting into the tail end of this current election cycle, because now we're getting into the political season.
Oh yeah.
Are you getting then
more
demand?
2 years.
I mean, we're already going into referendum, and then after that there will be a general election.
This is so unfortunate for this country, but I mean 2 years to elections, and we're discussing
We're already
this.
discussing this.
It's crazy.
But then there's an actual impact, because I come back to a question I was asking earlier. If there's already political clamoring between now and in August 2022, or whenever that election cycle comes in, and I'm possibly holding dollars, then if I invest my dollars, if I invest in your fund, can I invest in dollars and you give me a dollar return? Or does your fund only take Kenya shillings and give a return in Kenya shillings?
That's a very good question. And this is something that a lot of investors have asked us. So this is how we answer it. The fund is a Kenya shilling denominated fund. So the returns we quote are Kenya shilling returns. So when we say 23%, for example, that's what we've done this year, that is a Kenya shilling return. However, if an investor comes with dollars and says, I have $100,000 and I want to invest in your fund, then what we'll tell him is, yes, we can give you a dollar return, but we'd have to hedge out your currency exchange risk, because it means that we invest in Kenya shilling denominated assets, some of them, of course, because the fund has various asset classes in different currencies that we invest in. So we'll have to hedge out your dollar risk. And at the end of your investment, then we will charge you whatever hedging costs we went through and then give you the return. So just as an indicator, I'd say you'd shed off about 10% of the value of a Kenya shilling return to dollars. So if we return, say, 23%, you'd expect to get about 13% in dollar terms.
Okay, interesting. But then, of course, it would come also at an additional cost just for facilitating.
No, that 10% represents that.
Okay, it represents that.
That's it.
Okay.
It's something we do. I mean, because even within the fund, we hedge out our exposure to the various asset classes that we trade. I mean, the various currencies that we trade. So it's something we already do for the fund, and we're happy to do it for our clients as well.
Okay.
Because we have clients who also want to invest in euros.
Exactly.
Yes.
Exactly, for different fund
currencies.
streams.
Yeah.
But the same way you're saying that there's a minimum size, is there a maximum size?
No, there's no maximum size.
So I can bring.
I mean, we have investors who've invested significant amounts. And then we have. And that's the beauty of this fund. So we were able to create a fund that can have all sorts of clients, institutional, high net worth, and your typical middle class investor, and still get the same returns and invest in the same asset classes. So it's a very complex fund behind the scenes, but simplified enough for everyone to understand it very easily.
Okay.
So there's really no maximum. In fact, right now what we are working towards is trying to reduce the minimum. And I remember I alluded to this last time I was here in Q3, and we have come up with a very good product, and it's in the testing phase that should actually help us to even accommodate more investors in this sort of platform. Okay,
we can't wait to hear about that. I hope you'll give us the opportunity to discuss it as you're launching it.
We're looking forward, yes.
Okay, but then I was going to ask now, when you go to the upside in terms of the ceiling, is there an element of a single obligor? Is there an element of somebody having too much money in your fund and sort of exerting undue influence? So, for example, if Mbitha came in with 5 billion.
Okay, I can't wait.
I can't wait as well. I'm open to receiving 5 billion shillings or $5 million. Would you be able to accept that, or would you sort of be limited in terms of the obligatory, the obligations and the undue influence that would come with such a?
I mean, another fantastic question, and this is something that a fund like ours always has to consider. So just to explain how a fund like ours works, the funds we manage are not just the funds that we receive from investors. We also create what you call counterparty limits with other institutions, for example, other investment banks and commercial banks, both locally and internationally. So when I tell you that the fund is worth $2.5 billion, that's the amount of funds that we have received from investors.
Okay.
But in terms of trading limits,
yes,
it's about over 20 billion.
Okay.
Because we can trade such amounts with now other institutions that we have. So what does that do for us? Even if Mbitha came with her 5 billion, the notional size of what we trade is way larger than that.
Okay.
So it can't actually influence or cause us to have to change our trading strategy just to align with MBITE.
Okay.
So no, it doesn't affect us. We're able to create a wide, what you call a notional amount bigger than actual amounts that we invest in.
Okay, so 5 billion, that's what I need to bring, right?
Please.
Okay, so we're almost done with the time that we have. We've
Thank
talked
you.
about the different asset classes. We've talked about the performance and the expected performance for the final quarter.
Yeah.
I think what's most exciting is you're actually working on reducing the entry levels in
Yeah.
terms of what's the minimum ticket size.
Yes.
You know,
yes.
I always have to ask you about costs.
Yes.
Are you
yes.
reducing the cost of operation?
Unfortunately, I feel that our management fee, I think, is the highest in the country at 5%.
Yes.
But I feel that it more than justifies how administratively intense it is to run a fund like this.
Yeah, that's true.
I mean, we trade so many asset classes. We require traders on call, essentially 24 hours a day. On top of that, just really the platforms required to execute the trades that we have is quite significant.
Okay. So that's not changing. That's going to stay there.
Not for now.
Okay, understood. Is there anything else that's pertinent to the fund and pertinent to global and local investing that perhaps I've omitted in our question and answer session?
I think really just to affirm that MansaX, due to the diversified nature of the fund, continues to be a very good tool to diversify for any investor. If you're looking to diversify whatever holdings you have, and we're not telling you to dump what you have and come into MansaX, you can just diversify into it. It makes a very good case for anybody who's looking to just get higher than average returns, proper liquidity, and at the same time still protect yourself, because we run this fund very conservatively.
Okay.
A lot of people do not think we do.
All right.
Because they look at our return and they say, oh, that return is so high, you guys must be taking on disproportionate risk. But it's actually quite the opposite. We're very conservative in our approach to markets. It's just that we have a lot more assets that we trade. That's how we're able to give a bigger return. Nothing to do with taking on more risk.
Okay, and in terms of risk, your investment committee, does it have external participants or is it all internal to Standard Investment?
At the moment,
Bank?
it's just internal. At the moment, purely because the fund is just about under 2 years old.
Okay.
And a lot of what we trade is very proprietary. So I'd say other than SIB themselves, the other institution with a full picture of everything we trade will be the regulator themselves, who audit and inspect us on a regular. So there's a reason for this, because I mean, we worked very hard to create this product. We're really careful not to bring it out and lose our advantage so early in the game.
Okay, fantastic.
Yeah.
I think what I can say is December holidays are coming up, so before people go start eating mbuzis and yamachoma, perhaps
Please invest.
this is something to look out for.
Yeah.
And then the absolute final question. I think we're always talking about investments here, at least in Kenya, on markets today, and at times it's a bit disheartening when you can see so much happening out there and not as much happening here.
Yeah.
You have been a banker for a very long time. You have worked with local as well as global brands.
Yes.
Is there one thing that can be done just to fix the investment climate or the investment environment in Kenya to get us actually pushing returns such as other global markets? I know we can't compare in terms of maturity, but is there one thing that could possibly change so that we could enhance the returns that we get locally?
I think a lot more. I mean, the one single biggest issue for me would be we need to have a lot more capital flowing into businesses. Less capital flowing, being stuck in banks or being stuck with government debt. For example, a lot of our pension funds right now, a lot of them have over 75% of their funds in government securities. Now, that's a concern for me, because if you look at what small businesses or even just small, medium enterprises out here return, if you look at the ROE, we're talking about over 30%. Those guys outperform Mansa, by the way.
That's true.
And
okay.
why isn't capital flowing to those businesses?
Okay.
Why aren't our fund managers more active in allowing capital to flow into those businesses? Because it's only when we do that that will stimulate the economy enough for it now to generate to create the sort of activity that we expect as a market, and probably then we'll see a lot more companies listing. Our private equity space is dominated by foreign players, and we don't do enough. We don't do nearly enough. We don't even reach the limit that the RBA has set for pension funds, for example. So I think that's the one place I'd say, because that's the easier one.
Okay.
And then I'd say the regulator has opened up the market to more innovative products with the sandbox, for example. we expect that a lot more participants should be getting into this and coming up with there's no excuse right now, I'd say, not to create something innovative.
Okay.
There's no excuse now for trustees to keep accepting lower returns for their investors. There's no excuse anymore. They should now embody and accept innovative ways to make money, because they are there. I mean, in fact, the fact that we are a growing economy means that we have more opportunities than even us. I mean, if you go to Europe right now, the opportunities are so few in terms of making outsized returns. You come to Kenya, there are so many opportunities because the market has a lot of things that have not yet been done. The only thing missing is flow of capital.
So then can you take that flow in terms of MansaX? Would you consider taking that kind of risk in companies?
Yes, we would. Yes, we would.
Okay.
I don't, because I think if you look at a lot of our successful companies in Kenya, most of them, without an exception, have some sort of private equity investor in there. But however, most of them tend to be foreign private equity firms. So the question is, why can those guys see opportunities here that we always miss somewhat? Why?
Okay. All right.
So there's a question there.
All right. That now has become an ongoing conversation in terms of what can we do at least over subsequent periods. That's all from us. Is there any parting word that you'd like to leave our audience with?
Well, I mean, just excited about Q4.
Q4 is exciting.
Excited.
Okay, fantastic.
Let's hope we close well.
All right, we also hope you do that as well.
Thank
you so much for your time. That was Mr. Nahashe Mungai. He is an executive director at Standard Investment Bank. It's always interesting just trying to understand what is happening with this particular fund and also getting a sense of what is happening to global equities as well as global asset classes such as commodities and forex exchange. Now, this particular fund reported 29.3 percentage point return for the last quarter. What kind of return did you report for your own personal portfolio? I hope if nothing else, you've been able to learn one thing or two, and we eagerly await to see what happens in terms of the outlook of this fund. And Nahashon is telling us at some point there will be a lower entry level. Currently, the minimum investment is 250,000, and you invest this and you get have to pay off 5% in terms of management fee, then you get a higher return. That's all we had for you. We are happy to continue fronting your questions on your behalf. That's all from us today. I'm Bithe Mwema, your host for Markets Today. See you same time tomorrow. Good afternoon.